Imagine a blockchain pulling in banks, governments, and billions in real-world cash flows. That's Polygon right now. Stablecoin payments exploded 53% last month to $85 billion, and its token POL is testing key levels that scream upside. Developers flock to it like Bitcoin's equal. Latin America's loving it second only to Ethereum, and even the US government just dropped GDP stats on its chain. But here's the real hook. My chart shows POL coiling for a breakout to $1, with entries still wide open around 25 cents. If you're new to crypto, Polygon is that low-fee highway for fast, cheap transactions. Think sending money abroad without the bank hassle. Stick around. I'll break it all down, no hype, just facts to help you decide. Buy, hold, or wait. Let's kick off with the numbers that hit me hardest. Polygon CEO Sandeep Nailwal just shared this chart. Take a look at the screen. Stablecoin transfers, those digital dollars that move like cash but on blockchain, surged 53% in August to $85 billion from $55 billion in July. Supply climbed 5.8% to $2.9 billion, and transfers count held steady at 98 million, up a tick from 97 million. Why does this matter? Low fees under 5 seconds and 1,000 transactions per second make Polygon built for payments, not just speculation. If you're dipping toes into crypto yields, this is your stable foundation, literally. Speaking of foundations, ChainSpec dropped this gem. Polygon is a builder's chain, backed by over 1,600 developers who've cranked out 61,000 plus commits. It's neck and neck with Bitcoin in raw power. Every update evolves it for Web3 needs, decentralized apps, NFTs, you name it. Polygon is not flashy. It's reliable, like that workhorse engine keeping everything humming. Now, institutional cash is flowing in. Sandeep again. Polygon trading just launched on OpenBank, Santander's fully digital arm in Germany. Customers buy, sell, or hold POL without wiring to exchanges, seamless, right in their app. Rollout hits Spain soon. For beginners, this means big banks like Santander, handling trillions, see Polygon as safe for everyday crypto. More support like this? It's the green light for mass adoption. Hold up, whispers from Polygon Labs CEO Mark Boron and analyst Andy. The world's biggest payments processor, think point-of-sale king in the US, has quietly integrated Polygon. It's live now, handling real transactions. Details are thin, but if it's who I suspect, this bridges crypto to your corner store. Exciting? Absolutely. Turns Polygon from DeFi darling to daily driver. Polygon's not stopping. Check Goku's post on the Gigagas upgrade. By July 2025, 1,000 TPS, transactions per second, faster than Visa on good days, 5-second finality, when trades lock in, and no fee spikes. End of 2025, 5,000 plus TPS, 1-second blocks, ag-layer connections for seamless chains. Long-term, institutional floods and deeper integrations. This is scaling for trillions in volume. Stablecoins already crossed $3 billion monthly. Demand is climbing. Mark Boron nailed it. In Latin America, Polygon's the top chain after Ethereum. From June 2024 to 2025, labeled transactions, tracked on-chain activity, hit 11% Polygon share. Now it's 20%. Pie charts on screen show it. Ethereum at 71%, Polygon jumping from 11% to 20%. Why? Rock bottom costs and reliability for remittances, sending money home cheap. If you're yield hunting in emerging markets, this is gold. Wild one. Dave Wynn shares the U.S. Department of Commerce posting Q2 2025 GDP data, 3.3% growth, directly on Polygon. First federal agency doing this, making stats immutable and global. No more fake news debates. It's transparent proof of concept. Includes Bitcoin, Ethereum, Solana too. This cements it as blockchain capital. Trust from the top. Sandeep wraps fundamentals. Polygon owns 62% of tokenized global bonds. Real-world assets like Euro money market funds from Spico and Cashlink. Dune report graphs it. Ethereum leads treasuries at 5%, but Polygon crushes bonds. For newbies, RWAs are traditional finance bonds on blockchain, yielding steady returns without banks. This? Pure yield pro territory. Alright, time for the meat, my POL USD 3-day chart. Current price hovering 26 cents, coiling like a spring. Fibonacci levels, retracement tool measuring pullbacks, and anchored from December's local top to April's low, mark resistance zones. Starting at 30 cents, my first take profit target from 18 cents entries. Shout out July, June, April, March video links below. Price smashed the purple 55 EMA in late August post my last vid, but bounced off yellow 100 EMA there, classic rejection turning support. Orange dashed lines? Descending trend from December high, tested and flipped in July to ascending now, holding June and August lows. EMA's 10, 21, 55 cradle price for upside bullish ladder. Green box, my DCA zone from 20 to 26 cents. Still entry worthy, but watch the rectangle for a dip buy. I'm in heavy long-term bag stays. Stop loss? Weekly close below orange ascending line invalidates. I'd reaccumulate at 18 cents. Heikinashi RSI, a smooth momentum indicator, is neutral but dipping. Accumulation rest before next leg, in my opinion. VRVP profiles point of control at 24 cents, volume sweet spot. Super trend flipped green in July. Trailing stop at 19 cents for early birds. Targets, green circles at 40, 50, 75 cents, and $1.15. Trim profits scaling risk. My honest take, fundamentals scream higher, but crypto is volatile as hell, so trade smart, not greedy. I think Polygon is definitely not a moonshot. It's one of the main infrastructures powering tomorrow's finance. From $8.5 billion payments to GDP on-chain, it's delivering. If you're building yields, POL at 26 cents feels like undervalued rocket fuel. Watch my prior vids? Drop a comment with your entry. Hit the like button if this sparked ideas, sub for more daily breakdowns. Crypto Yield Pros got your back. Links to previous Polygon trades in description. Watch them and level up. What's your POL play? Tell me below. Stay sharp out there. Never financial advice. See you tomorrow.